Have you ever wondered how some real estate investors buy deal after deal after deal, but never seem to run out of money? Like they're always buying another distressed property or closing on another flip, but how are they actually funding all of these deals? Do they just have unlimited cash sitting in the bank, or maybe some wealthy uncle backing them? Well, the truth is, a lot of investors are using something called a hard money loan to fund their deals without having to go through a bank or tie up all their cash. In fact, many of the kinds of properties that investors look for, especially distressed homes that need repairs, don't even qualify for traditional financing in the first place. So if you've ever wondered how to get a hard money loan for a real estate investment like a house flip, I'm going to walk you through the exact process step by step in this video. I'll even walk you through a live hard money loan application for a real deal that I'm looking to fix and flip so you can see exactly what lenders look for. Stay till the end and I'll show you how to get a real proof of funds letter that you can submit with your offers, and another bonus that you won't want to miss. If you don't know me yet, I'm Ryan Zomorodi, co-founder of Real Estate Skills. I've personally borrowed millions from hard money lenders, private lenders, and capital partners to fund deals across more than a dozen states. Over the years, I've built a rental portfolio that's now worth over $10 million that generates over $400,000 per year in passive income. Hard money loans are one of the most common ways that investors fund fix and flips and other types of real estate investment deals, especially when they need to move quickly. But what exactly is a hard money loan? A hard money loan is a short-term loan that real estate investors use to buy and renovate properties. Unlike traditional mortgage lenders, which focus heavily on your income, your tax returns, and your debt-to-income ratio, hard money lenders focus primarily on the deal itself. They want to understand things like what's the property worth today, and what's your purchase price, and how much will the renovation cost, and ultimately, what will the property be worth after it's fixed up. This is what investors call the ARV, or after repair value. This is one of the most important numbers that you must learn to calculate. A lot of beginners ask questions like, can you get a hard money loan with bad credit? Or can you get a hard money loan with little or no money down? And the answer is, it depends on the deal and it depends on the lender. Look, cash and credit still do matter, but they usually matter a lot less than they would with a bank. What really matters is whether the financials of the deal make sense and whether the lender believes the project is going to be successful. So let's walk through a real hard money loan example so you can see exactly how lenders evaluate a deal. I'm going to fill out a real loan application step by step for a deal that I'm personally looking to buy and flip. And if you want to get the most out of this video, I recommend following along with me. You can click the link in the description and open the same loan application so you can walk through it step by step as we go. And don't worry, this application only takes a few minutes to fill out. If you already have a deal that you're working on, you can even plug in the numbers for your own property and get a real quote in a matter of minutes. By the end of this video, you'll know exactly what information lenders need to approve your loan. So go ahead, click the link in the description, open the application, and let's jump right into it. All right, first, I want to show you this property that I'm going to be applying for a hard money loan for. This is a property that is a great fix and flip candidate. It's listed on the MLS. It's a 2-bed, 1-bath, over 1,000 square foot home. It's listed at $595,000, which might sound a lot to you depending on where you are in the country, but this is considered very affordable for San Diego. As we can look through the photos, this property has a very large lot, a lot of underutilized space in the backyard, this large level lot, which is something that a lot of investors and just people who are buying homes in general in this area look for. Also, the interior, it looks worn in, it looks dated. It definitely could use some updates. It has some older finishes, older interior, and can certainly use a full renovation. So a property like this, it is possible just to do a full renovation with the existing footprint. We might also be able to add another bedroom and a bathroom to this to really maximize its ARV. All right, so here's the loan application. This is with a lender called Kiavi. They're one of the largest hard money lenders in the entire country. They lend in nearly every single state, and I recommend them to a lot of my students. We've worked with them a number of times as well. In fact, many of my students are using Kiavi's money right now to flip houses as I record this video. All right, so the first thing that you need to ask is, what kind of real estate investment are you considering? So they have multiple options depending on the type of project that you're getting into. So the first option is bridge, fix and flip, or fix to rent. So if you're looking to acquire a property, spend money to renovate it, and then either sell the property for a profit or rent it out to a tenant and then refinance as your exit strategy, then you would want to select this first option right here. Kiavi also offers new construction loans. So that typically means you're either tearing down the property or maybe just leaving a wall or two and then reconstructing the entire structure, maybe adding square footage or a second story onto an existing house. Perhaps you're adding multiple accessory dwelling units, ADUs. That's something that I do as well. Or they also offer rental loans. So if you're looking to buy a property, put it on a long-term loan and really just rent it out for passive income, then they also offer long-term rental loans. And if you're not sure yet, maybe you're looking at a property and you're evaluating various exit strategy, that's okay. Just hit I'm not sure. So since I'm looking to fix and flip this property, I'm going to select the first option. Now, the next question that they're going to ask is how many properties have you flipped or exited in the last 24 months? So they would also consider an exit as a refinance. So if you bought a property, fixed it up, rented it out, and refinanced, they would consider that an exit. So if you haven't done any at all in the past 24 months, that's okay. Kiavi does lend to first-time fix and flippers. So just go ahead and select none. And of course, just select the appropriate option for whatever your experience is. So I'm going to go ahead and select 5. So then the next question is, where's your property located? So very basic question. Mine's in California. So I'm just going to select that and then move on. So next they're going to ask for your email address. So this is how you're going to communicate with them and create your own account portal. And then ultimately you can see the loan progress as it moves forward. So I'm just going to type in my email address here, and then you're going to have to type in your phone number so that they can give you a call and discuss your loan option. So just go ahead and give them an active phone number for yourself. All right, so I just plugged in my phone number, and then now you're going to put in your name. So my name is Ryan Zomorodi, and I'm going to hit next. So now you're going to check your email just to verify your email address, and then you can open up your account. So I'm going to go ahead and do that. All right, so the email should look something like this, and then this is where you're going to set your password to open up your new account. All right, so I've set my password and we are moving forward on this application. Now you just simply want to log into your new account. All right, so this next question is, do you hold title to your investment properties in an entity? So what does hold title mean? This just simply means the name that you're buying the property in. So a lot of investors buy properties in an LLC or a corporation. Kiavi doesn't lend to you if you're going to buy it in your own name. Yes, you can flip houses and buy investment properties in your own name, but when you're getting hard money loans, typically lenders want to see that you're closing in a business entity, such as an LLC. Now, if you don't have an LLC dedicated to this deal quite yet, don't worry. You're going to have plenty of time to form one before closing. So if you intend on doing it, you can still click yes so that you can move forward. And if you're worried about the LLC costs or how to actually do that, don't worry. We have an amazing vendor that we work with a lot and a lot of our students use to create LLCs and other business entities basically for free. All you have to do is pay the filing fees with the state, which you'd have to do anyway. So if you want that vendor, go ahead and leave a comment below and I'll send you our vendor that we use to set up our business entities. So I'm going to click yes because I'm going to close this in an LLC. And then our entity is My House Friend LLC. So just type in your business entity here. And if you don't have one quite yet, then just put your desired entity name. And then here's where you're going to put the address of the property that you're looking to get a loan on. So if you don't quite have one yet, then go ahead and find an example property. Maybe it's one that you're eyeing, that you're interested in purchasing. You can go to Redfin, look at the fixer upper filter. I've created videos around how exactly to find distressed properties to buy, to flip. So go ahead and type in an address here so at least you get an idea of what type of rates you can get, what type of terms you can get, so that when you're analyzing deals, you're going to be that much more informed to make better underwriting decisions. So here in this case, we've got this property on Billman Street over here in San Diego. So I'm just going to copy and paste this address here. It's already uploaded. So I'm going to go to next. All right, so once you've entered your address, this is where it gets really exciting, where you can actually get the real rates and actual quotes and different options for your hard money loan. So confirm all of the information up top. Some of this is about you as the borrower. Some of it is about the property and the deal you're looking to fund. So make sure you have the right state, property type, and then do your best to guess your FICO score because they will do a soft pull. So whatever you enter here, it could adjust your terms and your interest rate. So just be as forthcoming as possible with this. Kiavi also doesn't lend if you have a FICO score under 640 is the threshold, I believe, for Kiavi. So again, if you fall under that, then they may not be able to lend to you and you might be better off finding another lender. But assuming you're above that threshold, just select whatever you believe is the most accurate. Leave personally guaranteed as a yes. You could also do no if you like. It might change the rates as well. I'm going to select yes just to get better rates. For refinance, if this is the first time you're buying the property, just select no because it's not a refinance. And then enter in the purchase price of your property. If you have it under contract, awesome. If not, put your estimated purchase price. So I'm planning to pick this property up for $550,000. And then don't worry if you're getting error messages because that's just going to help you dial in your numbers to make sure your loan will actually get approved. So under purchase loan amount, this is the amount of the loan that's going to be applied to the purchase price. So I'm going to enter in $500,000 here because that's about 90% of the purchase price. Then you want to select if you're going to rehab the property. So most likely that's a yes. I believe they need a minimum of about $1,000 rehab budget for this type of loan. And then estimated cost of rehab. So this is your rehab budget. In my case, we're estimating $65,000 to renovate that property, just over 1,000 square feet. So this is an adequate rehab budget. And then, rehab funds, you'd select yes. And then this is where you put your after repair value, which again is a very important number because this will dictate how large of a loan they're willing to give you. So in this case, I sized up the after repair value to be $750,000 once the repairs are dialed in. So you might even want to start with the ARV because then that really dictates the rest of your loan terms. So you can see here, this adjusts, it says loan to cost is 90.91%. And then the after repair loan to value is 75.33%. So in this case, it says this loan qualifies for Kiavi's special 95% LTC and 80% ARV leverage financing. So this simply means that Kiavi is willing to lend 95% of the total cost of the project, meaning the purchase price plus the rehab cost. They're willing to lend 95% of that, which is amazing. They'll also lend up to 80% of the ARV. So the ARV being $750,000, 80% of that is the maximum loan amount that they're willing to give me. So if I wanted to take that offer and get a high leverage loan at 95% loan to cost, then I would have to pay an additional 0.25% origination fee. So it's more expensive to get into the loan, but I could get higher leverage, which means I have to put less cash out of pocket to get into this fix and flip. So in this scenario, a 12-month hard money loan, they're quoting me 10.45% with a monthly payment of $4,354 and some change. They do have options up to 24 months at 11, almost 11.5%. So if I opted out of this higher leverage option, I would just adjust the purchase loan amount to $450,000, for example. So the amount I'm borrowing is less, but look how much the rates change. So the rates go down to 8.25% for a 12-month loan and 9.25% for a 24-month loan. That's a very significant difference. We're talking $400 or $500 per month in payment. So if I have more cash that I'm willing to put into this deal, I'll have to pay less in interest costs to this lender. All right, so let's say I go with the 12-month option here at 8.25%. That's actually very competitive. So I'm going to go ahead and select that option. The next question is just confirming that I'm a US citizen or permanent residence. So I'm going to check that box and that I will not be living at the property. So they don't do primary residence loans. These are investment property loans. They're also confirming the property address, which I'll select yes. And then now, what's your preferred signing date? So I'm just going to select the soonest available. And then once we've signed the loan docs, then they can fund one day after. So if you need a faster date than what they have here available, then just select the soonest available and then talk to one of their representatives when they give you a call. So I'm just going to select the soonest available and hit next. All right, so here on this next screen, this is where they're going to confirm the entity and individual details. So they have my entity name, they have my first and last name, and then what they're going to do is run a soft credit pull on the guarantor of the entity. So in this case, that's me. So soft credit pulls aren't going to impact your credit score whatsoever. It's the least invasive way. It's like if you're just checking your own credit on Credit Karma, one of those websites, it's pretty much the same thing. So there's no impact to your score. So in order to really lock in and dial in your rates, they're going to need to do this. It's much better than a hard pull, so you have nothing to worry about. And even before doing that, you can even look at the loan terms if you just want to get an idea of what it looks like. So we can see here, this is the property address. We have the loan amount, the rehab holdback. So this is basically the total loan amount, purchase price, rehab budget, monthly payment, interest rate, cash required at closing, which is roughly 20% down. Again, I have the option to have a higher leverage loan, so I might dial this in as we move forward. And then this gives you a rough estimate of their origination fees, as well as some of the other details with the loan that we already submitted. So going back to here, I'm just going to type in my date of birth and information here. That way they can properly run the report and give me the best quote possible. Then you just have to click these, which basically give them permission to run a consumer credit report and then a background report. So we're doing this in real time, everybody. All right, it says FICO has been verified, over 780 has been confirmed. So this is where having good credit pays off. Again, if you needed to dial in anything here, I might actually increase the purchase loan amount just so I have to bring less cash to closing. And so it might increase my closing costs, but overall I'll have to bring less money to the table, which is usually a good thing. So now I'm just going to select the 12-month option. This gives me almost just under 10.5% interest rate for 12 months. And then here's where you can review the actual loan term. So this is where it gets really exciting because you can see your real loan estimate with the estimated monthly payment, your interest rate, as well as the closing cost estimate. And as promised, here's your proof of funds letter right here waiting for you once you complete this whole application. So right here, you can see that it says that we've been pre-qualified to receive a fix and flip bridge or rental loan for up to $550,000. This is the purchase price that I entered into the application, has the property address, and of course it's preliminary and it's contingent on final approval of loan terms. But this is an excellent tool that you can submit with your offers to listing agents, to sellers, to show that your offers are strong and backed by real capital. So it'll only take you a few minutes if you're really looking for a legitimate proof of funds letter that you can submit with any of your offers. From here, all we have to do is submit for review, and this will take us right to the loan portal. So here's where you'll actually submit even more information, but from here, you'll have someone from Kiavi reach out to you and help walk you through the rest of it. They'll want you to confirm things like what's the scope of work on the property? So what exactly are you going to do to this home, line item by line item, and how much are those items going to cost? Additionally, they're going to want to verify the ownership details of your LLC or your business entity. So be ready to submit your operating agreement when requested. So the quicker you're able to communicate this information to Kiavi or any other lender you work with, the faster they're going to be able to move so you can ultimately meet your closing date. So that's exactly how you get a hard money loan and what lenders are looking for when evaluating your deal. If you're currently working on a property and want to see what you qualify for, you can use the exact same application that I just showed you in this video. Just click the link in the description, fill out Kiavi's quick application, and someone on their team will reach out to you with the next steps on getting your deal funded. And remember, once you submit your deal, you can request a proof of funds letter that you can use to send with your offers to make sure they're as strong as possible. And look, a lot of new investors aren't even sure what to say or what questions to ask once they actually start talking to these lenders. So if you want to learn how to talk to hard money lenders with confidence, I put together a free resource called the Hard Money Lender Script. It walks you through exactly what to say, smart questions to ask lenders, and how to position yourself as a serious investor so you can get the best terms and move forward with confidence. You can download it absolutely for free at realestateskills.com/hardmoneyscript, or just grab the link in the description below. And if you want a deeper breakdown of how to talk to lenders and structure your conversations, make sure you check out my other video where I walk through the entire script step by step. Thanks for watching, and I'll see you in the next video.